Hi, and welcome to 9Fin's Syndication Nation podcast. I'm Bill Weisbrod, U.S. Managing Editor with 9Fin. And today we are joined here in our New York studio by senior reporter Sunny Oh, who recently published a story titled The School of Hard Knocks about why debt investors have grown skeptical about some leveraged issuers in the education space. Thanks for joining us, Sunny.
Oh, great to be here, Bill.
So starting off generally, what kind of education businesses are we talking about here, and why have they become relevant in debt markets?
Also, think about like K-12 book publishers, reading software companies, anything that we use to furnish a classroom. A lot of these companies do provide, and their end clients are, these state school districts, and they'll fund everything they need. But at the current moment, they've been hit by a number of headwinds. Namely, they've been hit by the rollover of a federal funding program called ESSER.
The rolling off?
Yes.
Yeah.
And so it's a tremendous amount of money, $190 billion in total. And so it's been quite a funding cliff for some of these guys.
Interesting. So, how's that been reflected? Sounds like that's been reflected in the debt trading levels of some of these companies.
Yeah, exactly. Like if you look in the secondary market, a lot of these guys were trading at par earlier this year. Like if I could give you a list of names, maybe Hoffman Mifflin Harcourt, book publisher, ebook publisher. We have guys like Lakeshore Learning, maker of classroom furniture, and maybe like Renaissance and Imagine Learning, which are more sort of software types. A lot of them were trading at par earlier this year. Now trading close to the 80s. Some are trading a bit better, so like Houghton, I think it's in the 90s, but they're getting to the point where restructuring advisors are taking a closer look at them, and investors on the opportunistic side are thinking about what to do for some of these guys.
So what are there particular catalysts for any of these companies? Any of the ones you mentioned have triggers coming up, or anything that could force a restructuring, or not really?
In all honesty, it doesn't seem like there's anything that would precipitate trouble for them at the current juncture. But it nonetheless has been very difficult to replace this huge funding hole that has been left over by the program ESSER. Just to remind some of our listeners, ESSER was kind of this oft-forgotten program created during the Biden stimulus bills, started from 2020, 2021, $190 billion dispersed to school districts, and it sort of sunsetted September 2024. And although I think you were still allowed to use some of these funds until earlier this year, so we didn't see revenues completely fall off. So hence maybe why we didn't see these securities trade at distress levels until this year. But this was well telegraphed. Everyone knew it was coming, and it's not clear how it is going to be replaced. But for, let's say, an issuer like Hoffman Mifflin Harcourt, there could be positive news on the horizon. I think for this year, as much as ESSER was a problem, their funding, their revenues are often tied to, whether state school districts will adopt their books. And so that falls like sort of like 4-year or regular cycles. And I don't think this year happened to be the cycle for them, but I think next year will be, according to rating agencies. And so, if we see some of their books, some of their authors get picked up, it could be a big boost. And I think they've done a good job in terms of managing the transition from, hard books to ebooks. Ebooks, higher margin, you charge the same amount. I think that shift should be positive for them in the future.
When did that funding roll off really start to hit earnings, if it has yet at all?
I think our sense is it hit them around earlier this year, once sort of those annual results were being reported. We saw downgrades along with that revenue drop off. We saw EBITDA drop off. We saw leverage go up for some of these guys. And, I think it's particularly bad for, let's say, something like Lakeshore Learning, which had already been facing other headwinds. So, in the piece, we also talk about, as much as we talk about ESSER, as important as the program was, there's sort of these two other factors that are sort of hanging around the background. One is falling school enrollment. That's a problem for all these education names. Ever since the pandemic, kids haven't been at school as much as they used to be. And it's gone better. I think 2023 we hit sort of a peak, but I think
Or a
chronic.
peak or a trough in.
Oh, I guess like a peak in terms of like a chronic absence.
Gotcha.
Yeah. Some of the numbers are actually quite staggering. I think they were saying like chronic absence rates were like close to 30%. I think now it's something closer to 20% according to like estimates by Alvarez and Marshall. So we're in a better place, but nothing anywhere near pre-pandemic levels. And a lot of these school districts receive funding based on whether kids appear in class. And so, with kids not being there, the amount of funds that are actually getting into their coffers has dropped off. And that means less funds for these education companies.
So you mentioned, this wasn't a surprise that the ESSER funding was going to roll off. People knew this was coming. So I'm curious to know. I'm curious as to why that wasn't already baked into the trading levels, the debt trading levels of some of these companies. When did they start to kind of trade down to the levels you're describing?
It's kind of surprising how late they traded down. I think it was kind of May this year. And if we think about when the funding cliff happened, it was September 2024. So there was enough time to digest this news. Maybe there was hopes that a new administration would step up and figure out how to fill that funding hole, just given how big it was. But from the looks of it, there hasn't been anything quite there to replace that level of federal dollars, from my understanding. Yeah, it is a curious thing why so few knew about this problem, but I think it also demonstrates how little people even knew of this program. If you look it up, a lot of people don't know ESSER. I mean, it is a sort of PR failure in that way that no one knows what it even stands for. That may have been the problem. It's a bit of a mouthful. Elementary and secondary school emergency relief program. So I don't think it. Just given the amount of money that flowed out from the stimulus bills, I think this was one of those things that just sort of got stuck on the sidelines, even though it was quite meaningful to these school districts.
So what are anything that we, or our audience should be, what's the next thing to happen in this story, if anything?
I think it's just time. I think for a lot of these loans that these guys have issued, the maturities are quite far out, so they have plenty of time. They have revolvers that they untap. They have other levers they can pull. So the near-term catalysts are hard to envision. There are things they can do. So I think we also mentioned that some of these issuers, like Lakeshore, they were hit by sort of these supply chain disruptions brought by the trade war. For let's say Lakeshore Learning, they bring a lot of their hard goods, furniture, classroom supplies, toys from China, Asia. And with the disruption of tariffs, the trade war, they have made moves, according to rating agencies, to diversify those supply chains. But I think there's only so much they can do. It's not clear how much that's actually helped their bottom line.
Yeah, I guess it sounds like, the ESSER, roll off is a big deal, but there's also other issues, like you were saying, tariffs, school enrollment. That's kind of is a confluence of issues for some of these companies. So
yes,
So you mentioned, just to recap some of the names that you focused on in the story. You mentioned Houghton Mifflin, the book publisher. You mentioned Lakeshore, kind of a classroom supplies company. Who else did you focus on?
I think Imagine Learning and Renaissance Learning. And so these are just more like educational software publishers. So less affected by tariffs, which is good news for them, but more affected by, broader issues plaguing, the education industry, like falling school enrollment, and ESSER, which was a big windfall for them.
Yeah. All right. Well, thanks so much, Sonny. Anything else? Anything else you think you want to highlight from, your reporting that didn't make it into the story, or, that we should have an eye out for, in this story before we say farewell?
I think it's, as much as we like to talk about leverage finance and Wall Street, there is a human story to the end of this. ESSER was created to offset how badly kids suffered during the pandemic. Kids were in classrooms, they weren't reading, they weren't writing. And so when we saw learning outcomes, it dropped off, and ESSER was supposed to offset that. And so it's not clear where sort of the Trump administration stands on that, and whether they see that as a problem to be rectified. But it's clear, we look how kids are learning in schools, that's still a long-term problem. And so, yeah, I would just remind our subscribers that that is sort of a problem in sort of the background.
Yeah. It is amazing how kind of, these, bigger picture societal issues show up in the debt markets that we cover. So,
Yeah.
but it's worth remembering what's going on in the background. Well, thank you so much, Sonny. It was great talking, and appreciate it.
No, appreciate you having me here.